Good morning, everybody, and welcome to another Monday morning market review with yours truly, Ian Giffen. It's a beautiful morning here in the Southern Cape of South Africa. This weekend was spring tide, so we've had the waves come right up the beach through the night. Really very impressive. Everything's washed clean, and it's stacking up to be a real scorcher of a day. So still very much summer here, and enjoying it, making the most of it. So after all the action last week in the markets, I'm hoping we'll get a bit of a breather this week so that I can spend some more time walking the dogs on the beach and spending time with the family. So let's see what happens. We never can predict the market. And I think, as you guys will certainly agree with me, last week was a perfect example of that, where the week opened with incredible continuation of some very established impulse waves within the trending markets that had been going on for a while. And then by the end of the week, everything had absolutely turned around, and all of that directional bias had evaporated. I'm not, I refuse to allow myself to fall into the trap of what we call the narrative bias, which is what journalists do. They will say gold is up 2 points due to XYZ, when in actual fact nobody really knows the reason. But I certainly think Biden bombing Syria last week had something to do with it. So quite strange that the warmonger, in inverted commas, of Donald Trump did very little, and here we are straight into a new administration and back to hostilities in the Middle East. In any case, we as traders like volatility. We are very happy when it happens. We've had superb directional volatility over the last few weeks, but it can't go on forever. And that's the reason why we adopt convex strategies, where we look to maximize upside, but before doing that, we look to minimize downside. So although we would have been stopped, you would have been stopped out, certainly I was, on quite a lot of trades Thursday night and Friday morning. It didn't really matter, because we'd been able to maximize our upside up until that point in time. If you're risking 1% per trade, which is not something I recommend, certainly for the funded account traders, those of you who part of our funded account program, we definitely don't want you to do that. But if you're trading your own account quite aggressively, 1% risk per trade, then you could easily have cleared 30% profit in the last couple of weeks, with if you've taken all of the trades across the board. So certainly huge upside there. And then that reversal last week shouldn't have cost you more than just a few percent, certainly with the trade management, active trade management, and the trailing of your stops. But in any case, let's have a look at some of the markets. I'm not going to spend time on all of them, but let's start, as always, with the Euro USD. Here on the weekly time frame, you could see how last week did create a new higher high on the candle over the last month and more. But by Friday had come all the way back down and given us a bearish candle, a high test, in fact. And given our rules for the overlay, this is in fact a setup to short the market for an overlay. It is on the weekly time frame, so only if you are trading that time frame. So dropping down then to daily, let's have a quick look at that, where you'll see how we had that reversal during the course of Thursday, certainly Thursday afternoon, and then Friday continuing with a very strong bearish impulse candle. So that was in fact also, let me just increase that for you. That was also a setup for a short overlay. Now I'd just like to look at this again in the context of the 2 daily time frame strategy. So if you're trading daily impulse, we discussed this in some of our training last week, where I also cautioned you guys not to chase trades. And in fact, you would have seen that some folks got in at the close of the second impulse candle, or the open here of what was, I think, Tuesdays, whereas in fact you should have gotten to the market at the open of Monday's candle. Now, this is actually an example of why it's so important to get in at the right time and not get in late. So this being the setup here, using our 2 5-step trailing stop rule, you are able to trail your stop to below the candle's low from Wednesday. So Wednesday night, you'd have trailed the stop to below that low. Now, had you got into the market there, as you can see, it was very close to break even. Whereas if you'd only got into the market in the open of that candle there, as I was discussing on Tuesday morning, then clearly your open risk would have been far more substantial. So your ability to manage your downside is compromised if you chase trade. So that's just following up on that discussion so that you can actually see the outcome here. And how important that is. So those of you who did get in late, you felt a bit more pain there than the folks who got in at the right time. So yeah, there we have it. Very nice overlay. So we entered that first thing Friday morning, and during the course of Friday, that went straight to target. Okay. So there we have the weekly reversal. Well, it's not a reversal candle, but a high test candle from last week on the cable. And that, of course, brought to an end, a distinct end, even on Thursday evening, that bullish impulse wave. But more than that, we actually had a close inside of the channel. So the trend is still there, but at this stage anyway, but it's now showing quite significant weakness. So you know what to do with that, especially if you're trading on the lower time frame. So we just need to wait and see there. All right. Dollar yen, we had a breakout thanks to that dollar strength, yen weakness. That was also actually a setup for an over. No, it wasn't actually. It was actually a setup for an overlay to go short. That one lost. Yeah, that didn't work out. But there was a setup on here to short this on Thursday as well. In any case, that's a breakout now on the weekly time frame on the yen, and of course that means that when we look at our daily time frame, then we should be waiting for that pullback and looking for a daily impulse in a bullish direction. Likewise, you can see the market has broken out of the channels here, and in fact did so on the daily time frame already on close of Wednesday. So Thursday and Friday, in fact, you should have been able to trade this on H4 impulse. I'm not sure if I did. No, I haven't done any analysis on this one. But remember, if you had, then Thursday and Friday being the last part really of this bullish trend here on the H4 time frame. So you should have been able to get in. I think there was one winner and one loser on this time. On the H4 impulse on the dollar yen. Dollar Swiss, yeah, still very much inside of that channel, isn't it, on weekly? So not really looking at anything there. But we did have the breakout on the daily time frame, of course. So that initial breakout was also last week, Wednesday. And that, I guess, if you were going for it, I think I've just shown something that somebody else did here on an H4 impulse where they didn't wait for the pullback. And fortunately, this one actually did win. You know that I'd prefer to wait for a pullback before doing anything there. So yeah, we don't really look to get into trades late on a Friday. In this case, it's a bit of a pity. But in any case, that's also in terms of your timing. Being careful with the timing. If you're following that, then this wouldn't have applied because this was the 12 to 4 p.m. candle. If you're simply going for entry post pullback and you were going for a Friday entry, then 4 p.m. Friday would have got you in there. And certainly you'd still be in this trade and looking to manage that that stop through the course of today down to break even. So that's that one. Looking at USD Cad, there again, you can see how we, in fact, had another test of the support level here and during the course of last week. And as it's really sort of not quite a mirror image of the euro, but no, beg your pardon, talking nonsense there. But still, we can see that it tested the support level. That test failed. If this ends up being an isolated low, then we've got phase two. And also, it is already a setup to go long for an overlay. Looking at daily, of course, that reversal very clear there on this time frame. Let me just reduce that a bit. So that bearish breakout that we'd had previously, obviously that has now pulled straight back inside of our channel. Aussie, same sort of picture. You're going to see a lot of this on the weekly time frames. Very clear bearish candle there. So technically, cyclicity is still intact here. Obviously, with this bearish candle, even though through the course of last week we did have a higher high, you just need to be a little bit cautious about this. But of course, if we get a bullish impulse candle at the end of this week, well, let's talk about that next Monday. But you will also know what to do with that. That's the daily time frame. Impulse wave, definitely over. I think last week this was one we had. Actually, I think we actually finished off on a winner with this one. So one of our trades here got stopped out either at or close to break even. So and that was also if you were loading up. So likewise here, this trade didn't work out. This one actually got stopped out, I think, for a full stop loss. This one for a smaller loss, that was a winner. So there you can see it. In fact, if you look at these three H4 impulse trades, not to belabor the point, but yeah, full loser over here, then maybe a 0.35% loss, so 1.35% loss between these two trades. Re-entry over here with that nice little H4 impulse candle, which kept us going. We managed to survive that. That went on to hit its take profit for about a 2-to-1, I think just over 2-to-1 reward to risk. So one winner, two losers, and you end up with almost a percent profit. Convexity at work, as always. Kiwi here, definitely a setup to short this for an overlay. So that's not quite what it looks like, obviously, but certainly last week's candle set up to short this. On the daily time frame, we've also seen the market come all the way back inside of the channel. So that's also not just the fact that the trend is technically not over isn't the whole picture here. It has shown a weakness because it failed to respect two significant levels of support, which means that there's something, the fundamentals last week really drove the market quite far. I'm not really interested in what the fundamentals are, but from a technical perspective, certainly we can see significant weakness having crept into this market. Now, I don't want to make a predictive statement here, but when we see that, the odds are higher that we are going to see some form of a reversal pattern here over the coming week and maybe 2 weeks. All right, so that's all of our majors and minors. Going to the yen crosses here on weekly euro yen, you'll see that it's not showing quite as significant reversal patterns as we're seeing on some of those dollar pairs. So here we have our daily time frame, where certainly we had that pullback on Friday, but look how it actually did continue to respect this support level, even though it opened slightly lower this morning. And went lower at the moment. And look, today it's still got a long way to go. It's still early in the day. But at the moment, it is looking to respect that support level. We will come back at the end of today and have a look at that. But it'd be pretty interesting if it has done. So that could well indicate a continuation. If you're trading continuation strategies, then that would in fact be a setup as long as the market doesn't close below that support level. So here on GBP yen weekly, likewise, okay, high test candle last week, but this impulse wave is still intact. Similar picture, but even stronger looking, if you like. So the pullback through the last 2 days of last week, we're still far away from the support level. Definitely not seeing the same level of weakness here as we're seeing on the dollar pair. So we did have a daily impulse that we spoke about before over the last couple of weeks. Managed to hit the take profit on that just before that news came out on Thursday. So that was actually quite a nice win. Let's just see what we had on H4 as well. We had a couple of trades here that worked out. I think certainly that first one worked out fine. Of these three that we're looking at here, let's move that out of the way as well. I think we discussed some of this. Yeah, we discussed some of these before, so I don't want to belabor that point. But going through to what we spoke about a week ago, yeah, so here's the start of the week. There's an H4 impulse that obviously hit take profit very quickly on that one. There were more trades over here. So if you'd taken another H4 impulse in this vicinity here or here, then you would have actually been stopped out on that one. I know we did have a trade that got stopped out here. So if you'd taken a trade on this one, stop below the low, you would have been able to trail the stop with a 3-6 rule. So it wouldn't have been a full stop loss. But that's an example of where late in the week we actually had a couple of our trades getting stopped out, as you would in a retracement like that. So Swiss yen, slightly different story here. You know, we had that weekly overlay as well, which didn't actually go on to hit the take profit. So that may well be closed out the end of this week. Let's see what happens there. Dropping down to, well, I just want to point out as well on weekly, we're still inside of the channel. So not looking at anything trending for the daily time frame. And here you can see even on the daily time frame, came back, respected our support level here nicely. That was a setup for an overlay during the course of last week, which actually went on to take profit. So, but apart from that, nothing doing. Certainly no directional bias or usable directional bias in this market. Moving on to Cad Yen. Again, let's just go to weekly first. So that high test as well last week, still just a bullish candle with a higher close, but still very much a bullish impulse wave. There's that retracement. And unfortunately as well on Friday, it's, well, I say unfortunately, it's just the way it is, closed inside of the channel, you know, showing a little bit of weakness there. But as you can see, we've got enough pairs to look at, but that's where we draw the line. We need to draw the line somewhere, and that's where we draw it. Aussie yen, more significant pullback. You can see how the risk pairs suffered more. Here on the daily, you can see how we've actually had an impulse wave followed by an impulse wave. I think, actually, let me just double check this. Yes, okay, so that was just made it into a retracement wave. So not a significant support level. In any case, technically this is an impulse wave followed by an impulse wave. So that trend is over. So nothing doing there for the lower time frame. And yeah, on a weekly as well, let's wait and see what happens here. We may well have continuation. So if that happens, then over the coming weeks, that trend is still very much intact, is basically what I'm saying. So Kiwi Yen here, likewise, you can see that the New Zealand dollar is showing a bit more strength. That same pullback to the latter part of last week, we obviously hit take profits on daily impulse trades. If you're using advanced targeting, you would have scored quite a bit more on some of these trades, and likewise on H4. But then again, the latter part of last week, some of those winners would have been curtailed. But yeah, so still, however, outside of the channel on this. So let's wait and see. Again, I'm not predicting here, but these are significant pullbacks. So getting back into another impulse wave would be pretty impressive, but we've still got to take those trades. Remember, even if we just have a potential impulse wave here, and you get into a trade, even if it ends up not being an impulse wave, you could still will have a winner on the lower time frame strategy. And you managing your downside. So either a small loser or a bigger winner. Don't try and predict the market. And I think just to drive that point home, coming back to previous discussion about the difference between overextended markets and markets with momentum, the fact that they look identical, you have no way, certainly in the currency markets where we don't have any accurate measure of volume, then yeah, when people first started talking about the markets being overextended over the last few weeks, they would have missed out on the best trades. And that's why I don't look to make that value judgment in my trading. So our convex strategies look after that side of things for us. We just have to take the next trade. We can't predict what's going to happen. We can't predict if the market is going to keep on going or if it's going to reverse at any point in time. Last week's reversal could have happened sooner. But if you were trading actively through that period, you would have had these nice big fat winners. and some smaller losers. And that's convexity. Okay, Euro GBP, similar picture, obviously, but this is obviously going in the opposite direction. But interestingly, on Friday, sort of corrected itself a little bit more. But obviously, there is this correlation between the pound and the euro. In any case, for anyone who's a continuation trader, you would have actually been into this already. You might have set up a limit order short, and you will already be short on this market. If you are an impulse trader, if we get an impulse candle here today, bearish impulse candle, then that's a setup to short this market again. Our previous daily impulse having nicely hit the target through the early part of last week. And if you were using advanced targeting, I think you would have actually ended up with slightly more, but almost the same. Right, Euro Swiss, we just use this really for our scoring, but you can see that last week's candle was a significant breakout. I think many of you did take trades on this pair, and of course that gave certainly on the lower time frames some very nice winners. So well done to those of you who did that. It's my least favorite pair, I suppose, along with the Euro Cad. They neck and neck as far as that's concerned. Here you can see almost a similar picture to the USD Cad, where it failed to close below the previous low. So bearish, but if we get this low isolated, then that would mean a non-impulse followed by a non-impulse, or a phase two, which means a false breakout, a failed breakout over here. It's also set up to go long on an overlay. Let's see what happens. On the daily time frame, likewise, you'll see how that was a false breakout. It's just a little bit too soon, perhaps. Let me double check this. High 78.2 and the close. Wow, by 0.3 pips, this is technically still a trend, a weak one, but just still a trend. So interesting that. Let's see. There's going to be, I think, some choppiness creeping into the markets in the next couple of days as people digest what happened last week. Okay, another one, Euro Aussie. You can see last week's weekly candle being a significant reversal type candle, and you can see here on the daily time frame. I think we had. I'm trying to think. Was this must have been our last H4 impulse? It certainly was. There you go. Last H4 impulse just hit take profit, squeaked through. Sometimes it works out, sometimes it doesn't. But that ATR targeting working out perfectly over there. Our previous daily impulse also having hit take profit. I think that was actually Monday, Tuesday, Wednesday, Thursday, Friday. Yeah. So some nice chunky winners having just hit their take profits before we had all of that reversal. Another similar picture, Euro NZD, as you can see. Likewise, here, this must have been a daily impulse, I think, and not a very good reward to risk ratio, but also having just hit its take profit. So nice one there. But don't forget, we did have our fair share of losers on H4 impulse, but this wasn't one of them. You can see our two H4 impulses here having hit take profit quite nicely, and not a single setup after that to go short until basically, of course, this morning, but not with that picture. So yeah, definitely not doing anything of the kind on H4 impulse, and I don't think we were looking, yeah, certainly wouldn't have been looking even on Friday, but that's what all of that activity was there in any case. So this bearish trend is now over, impulse, so we're not trading the H4 on this at all anymore. Having said that, technically the trend is still in place on weekly, so should we get a bearish impulse candle here, then it would in fact be time for us to short the market on the daily time frame. Okay, pound crosses, here we go again, high test, all very much the same kind of picture. If you're a continuation trader, you'd be back in here. Last week we had our take profit hit on that daily impulse. Advanced targeting here, very clearly showing that you would have made significantly more Yeah, that really is the kind of trade that you need to help make up for some of those smaller winners that you tend to get on the advanced targeting. So if you're a continuation trader, you'll be long on this already, in fact. So GBP Cad, same kind of thing. Don't want to belabor the points here. Not quite as much strength. You can see here on daily, although we got outside of the channel, pulled straight back inside of it again. Let's wait and see what happens here, but definitely not showing any strength. I think this just survived in terms of the trending. So even though we had that lower low, we didn't get a lower close on Thursday night and Friday's open. So yeah, much more weakness here. Aussie here on weekly GBP Aussie. This was an overlay. We're long on this, but very much inside of that channel, as you would expect there. But yeah, with that very strange price movement that we had on this pair on the daily time frame, we've actually had a bullish breakout here. But let's see what happens through the course of today. But technically, this bullish breakout, for those who are lower time frame traders, would have you keeping an eye open for a bullish impulse candle on the 4-hour time frame. I'm not sure you're going to get it though, but yeah, we just don't know. GBP NZD still languishing on the weekly time frame, very much inside of its channel, so nothing there. But we on the daily time frame, likewise, still inside of the channel. We did have a bearish overlay that got stopped out for a small loss. By the way, the overlay strategy last week on the daily time frame actually made a slight profit. So interesting, because the core strategies made lots of profit. Very often you'll have the one, if you make a profit on the core, you'll have made a loss on the overlay. So nice that I think we made, if you were risking 1% per trade, you made just under 0.8%. Okay. Cad Swiss, another one of those, high test, all similar picture showing here. Nice that we had that daily impulse there. This one, standard targeting would have netted you a little bit more than advanced targeting. So there you can see the difference. But still very much in a strong trend. It's in a retracement wave on the daily time frame, of course. If we were to get an impulse candle, however, we are in an impulse wave on weekly. So an impulse wave on daily, set up for daily impulse to go along. If we do get an isolated low here and have reason to believe we're back into the next impulse wave on daily, then you can trade on the lower time frames. H4 impulse here, again, you can see this is from Monday. Monday's trade got stopped out, full loss there, followed immediately by another setup, which gave us a nice win. If you'd used advanced targeting on this, however, you would have made significantly more. But taking it through to another setup, and that also was quite a nice win. Again, just hitting the take profit, which was nice. And if you're using advanced targeting, you would have netted a little bit less over there. But for whatever reason, last week, many of these just managed to hit our take profit. So we had far fewer losers as a result. And again, that's also why it's so important to make sure you get the right entry. If you're getting a later entry, then you're less likely to have the trade work out, and it's more difficult to manage your risk. Right, Aussie Swiss, similar picture, still trending, but obviously very significant failure candle there in that bullish trend, represented by those two bearish candles, Thursday and Friday. However, this is still technically a trending market. It's a very significant pullback. As I say, if I were to make a predictive statement, which I won't, then we just need to take cognizance of the fact that any bullish activity over here might just be some of these the stop and limit orders washing themselves out. People getting some balance back into the market. But still, we follow our strategies. Don't try and predict the market. Similar picture again, however, still trading. That is a bearish engulfing candle. Please bear that in mind, which means that from the point of view of this potentially, in fact, this has to now be, we have to have a bearish wave over here. So This is already then a bearish retracement wave at the very least, which means that this is not a bullish market. I beg your pardon, this is a bullish trend, but we're in a retracement of that trend. So a bearish retracement. And not only that, although this managed to close above that previous high, so that just made it as an impulse candle. You see the close is at 23.6 and the high. Yeah, so looking at about close 23 odd pips above that preceding high. There's huge weakness over here, no question about that. And that can be seen here on the daily time frame as well with a bearish impulse candle here. So I do think this is one of our losing. Yeah, so you can see this H4 impulse didn't make it, got stopped out at break even. Taking another one over here, of course, would have actually had this one stopped out for a loser. So this is an example of a losing trade. We had our nice winners, but we had a couple of losers as well in that retracement last week. Certainly on those markets which are a little bit weaker. Right, weekly time frame. Again, here you see that pullback. New Zealand dollar definitely showing some more strength in this correlated pair as it rolled over. Also bearish engulfing candle. So this is definitely bearish wave now. We're already into that. So what I'm saying with that is this is almost guaranteed effectively to be a bearish wave. If this market were to come all the way up and make a higher high without making a lower low, then it is true that this, actually no, even then we would have a single candle wave. So it's guaranteed to be a bearish wave over here. So yeah, in any case, we don't have anything going on at the moment. We did have that bullish overlay, which was a nice winner, but that's a couple of weeks ago. And here you see it on the daily time frame. Now, we touched on this previously. We also had a bullish overlay here that take profit a while ago. But that bullish breakout that we had in the early part of last week, I think did lead to an H4 impulse on the 22nd. Yeah, so last week, Monday. And we got stopped out on that for, I think about 0.7 loss. So that didn't work out. It looked like it was going to, but it's one of those as well that didn't work out. So these weaker markets not quite making the cut. All right, Kiwi Swiss on weekly. How many times have we seen that picture now? Still bullish trend, still technically in that impulse wave there, but same picture here with this rolling over quite significantly. Why am I not getting this updated? Okay, let's go back to that. Apologies for that interruption. We had a brief break in our connection. Let me just back briefly. These charts need to update as well. So in case, doing our best here. All right, so I don't really need to see what's happening today. So similar picture, of course, here. Likewise on 4-hour time frame. This is one. I think this is the most impressive of the advanced targeting trades, H4 impulse. If you're taking this one, we had that early loser from Monday for about 0.5%. And then we had a very easy winner straight after that, going to show how important it is always to take the next trade. And of course, if you were using advanced targeting, you would have had a stonking winner over here. So, right, happened again, unfortunately. So apologies for the intermittency, if you like, of this Monday morning market review. Let's just go back to that again if we can. Almost finished. Right, so that was Kiwi Swiss, spoke about that. And the last one, New Zealand dollar, Canadian dollar. Just want to point it out, this also was a setup to short this for an overlay. but we may well be getting some continuation. Let's wait and see. So here on the daily time frame, having pulled straight back inside of the channel as well. I'm not going to second guess what happens today and the days ahead. We just follow our rules and go from there. So yeah, that I think covers it for the currencies. I think you guys probably have noticed on gold how we've had, let me just right, so apologies once again. I think I'm going to call it at this stage. And if there's anything that you guys would like me to expand on, please ask your questions, as always, in the comments. Happy to respond there if you have any questions or concerns, but hopefully that's helpful. It's going to probably be a quieter week ahead, but we never know. Just remember to follow your rule set. Remember, our goal is always to minimize downside and only then maximize upside. Right, I hope you have a blessed week and a fun week trading. And I'll talk to you guys for some extra training later in the week. Bye for now.